Types of fraud. Essentially, fraud is any financial losses to the company caused by the dishonesty of employees, suppliers, or customers. However, it can take some different forms. Ponzi schemes. A Ponzi scheme is a fraudulent investment scam that gives the appearance of paying its investors profit, for example, at a set percentage each month. In reality, the returns paid to investors come from their own money or subsequent investors' money in the scheme. A Ponzi scheme frequently offers investors a high rate of reward to entice them into the scheme, meaning that the scam can continue for an extended period due to investors' willingness to invest significant capital sums on the false assumption that they are receiving high levels of return. Corporate fraud. Many types of fraud can be committed in a corporate environment, both at the employee and boardroom levels. These include market abuse or insider trading, falsification of documents, confidential information and trade secrets for personal gain, procurement fraud, false expenses claims, payroll fraud, and extraction fraud via false invoicing. Mortgage or property fraud. Any mortgage obtained by providing false information, whether the value of the property or the value or source of a deposit, means that it will have been obtained fraudulently. The evolution of technology and the ability to process applications online with little face-to-face contact is one of the reasons the number of fraudulent loan applications has increased. Property fraud can arise in other contexts too. Money laundering. Money laundering is how criminally obtained money is converted to make it appear as if it were obtained legitimately. Money laundering, in legal terms, is any dealings with the proceeds of crime, so fraud and money laundering will often go hand in hand. IP infringement. A business' intellectual property rights, particularly its name, are perhaps the most important asset a business owns, since they encompass its entire identity. However, the definition of IP is extremely wide, including much more than the name of the business, extending to its copyright, designs, patents, and trademarks. IP infringement occurs where it is suspected that information is either used under pretense or information has been taken to sell it back to the business. Phishing. Phishing involves email or pop-up messages that appear to be from an organization, for example, a bank, asking a customer for information concerning their account, such as requiring them to confirm, update, or validate their details. The email may direct a customer to an artificial site, which will look like a legitimate site of the organization that the fraudulent email was supposedly sent from. The fraud takes place on the back of the information supplied.